What's going on, motivators? How we doing? Here are 4 myths that you may have heard about the VA loan that are complete misconceptions and they're wrong. I'm about to show you why. But before you do, make sure you like, comment, and subscribe to my page. I am a veteran mortgage advisor. My name is Justin Chermak. I'm also a veteran myself, and this is what I do is teaching veterans about the path of home ownership and using their VA loan. And you're going to find a lot of really good info in this video and if you subscribe to my page. So let's get right into it. 4 myths about VA loans. Myth number 1, a lot of people think that VA loans are only for active duty military. However, that is completely false. You don't have to be active duty in the military in order to use your VA loan. Actually, you don't have to be in at all. You can be a veteran, you can be retired, you can be a reservist, you can be a member of the National Guard. There's a lot of different variables that you got to consider. It's not just for active duty personnel. Now, how do you qualify for a VA loan? It's really simple. I do this in a lot of videos, but I'll break it down for you real fast right now. The first way to qualify is if you have 4 years of active service, boom, you qualify, no sweat. If you have 6 years as a reservist of 6 satisfactory years with 50 points or more, you will qualify as well. Or if you're a reservist who's been activated for a period of 90 days or more on Title 10 orders, you will also qualify. Now, there's one other little caveat. If you were activated during COVID times, that you can also qualify by only having 30 days service and 90 days total cumulative. But for the most part, think about 90 days consecutive. Now, that's myth number 1. It's not just for active duty personnel. Myth number 2 is that VA loans require perfect credit. And that's completely false because actually the VA doesn't have a credit score minimum at all. Now, a lender will have an overlay, and a lender might say, hey, you need to have a 620 credit score or a 580 credit score and above in order to qualify. But if you search around for the right lender, you'll find that a lot of them don't have those overlays. For instance, for me as a lender who's licensed in from New York to Cali to Texas, all over a bunch of different states, I don't have a minimum credit score requirement. So that's something to consider. And if you're watching this video right now and you don't have the best credit, I can also help you repair and rebuild your credit. So make sure you reach out to me. Now, myth number 3, VA loans are complicated. Well, not exactly. They're actually the easiest loans out there, but the problem is that 90% of loan officers out there don't do a lot of VA business. They don't know how to close it. They're unfamiliar with the guidelines, which are completely different than conventional and FHA guidelines, the 2 other main types of programs that you'll see out there. So that's why it's important to make sure that you get someone with the expertise like myself, a veteran mortgage advisor, someone who does a lot of VA loans. If you don't know anybody, obviously use me. Shameless self-promotion right there. Now, VA loans actually are super easy to do. The guidelines are more flexible than anywhere else, and you can actually qualify for a larger and nicer house using a VA loan than you would for a conventional or an FHA, using something called residual income. VA loans are calculated off of residual income and not debt to income ratios, but I'm going to save that for another video. So you're going to want to make sure that you subscribe to this page so you can find out that video, because that's going to be the one that I'm going to be putting out next. Now, myth number 4, and this is the stupidest one, VA loans are more expensive than conventional loans. No frickin' way. Not a single chance. VA loans, you can put 0% down. And guess what? You don't have private mortgage insurance like you would with a conventional loan, or mortgage insurance like you would with an FHA loan. Now, mortgage insurance is different than homeowners insurance. Homeowners insurance is for you to protect you against anything happening to the house, such as a hazard, a fire, a flood, or some kind of theft or something along those lines. And mortgage insurance is for myself, the lender, not for me me personally, but the lending institution I belong to. That is to protect them against your default. Let's say you stopped making your mortgage payments and you went into foreclosure, lenders lose a lot of money. So typically people who put down less than 20% have a higher chance of default than people who do not. But the VA took care of that for you, and they guaranteed the lender 25% guaranteed of the value will go back to them in the event you default. So there's no mortgage insurance. Mortgage insurance can be very costly. It can cost you anywhere from $80 to $800 a month is about the range that I've seen it. So it's impossible for conventional loans to be less expensive than VA loans. Now, other things you have to consider too is that VA loans will have typically lower interest rates. And the higher your interest rate is, the higher your monthly payment. So that's another thing to consider. Now, I hope you guys like this video. I share all this content, all this great content teaching you about your VA home loan and how to use it. I'm licensed in multiple states. So if you want to use me as a VA lender, you can always reach out. My number is 631-525-0231. I only ask you call me between the hours of 09 to 2100 Eastern Standard Time and not outside that window. I'm not going to answer your call at 3 a.m. All right. Anyways, stay motivated and always like, comment, and subscribe if you found any of this information